Hey everyone, welcome back to another weekly market outlook. This is for the 19th to the 23rd of December 2022. My name is Vito and let's get this started with a quick recap of a huge week. So we start with the UK GDP numbers. We've got the month-on-month numbers up slightly to 0.5% versus 0.4% forecast. GDP year on year from the UK also better than expected, coming in at 1.5%. UK unemployment rate up 3.7% as per consensus. Now let's get into the meat of the week last week. So we've got the US year-on-year CPI. This one fell 7.1%, lower than the forecast of 7.3%, and also a 0.6% drop from last month's reading. The core CPI also drops to 6% from the previous reading of 6.3%, lower than the forecast of 6.4%. So all of them are coming in lower than expected. We've also got the UK year-on-year CPI dropping from 11.1% to 10.7%, below the expectation of 10.9% drop. UK core CPI comes in lower at 6.3% from 6.5% previous reading and forecast. Now, the FOMC does slow down the pace of interest rate hike, only hiking by 50 basis points. This is already anticipated by the market, so there's no surprise here. One of the few things to look at is actually the economic projection. Now, the FOMC does increase their interest rate projections, but the FOMC is actually nearing the terminal rate, so there should be no upside surprises to inflation, labor, and PCE data. So let's take a look at what this interest rate projection is, what it was compared to the previous economic projection. Now, with the current year projection, the previous projection was 4.4%. This is unchanged at 4.4%. So currently we are pretty much at 4.5%. So pretty much on track with that for the current one. For the next year, the previous consensus or the previous forecast was actually 4.6% in terms of interest rate. Right now for 2023, this is going to be 5.1%. So there's an increase in the projections. For 2024, it was 3.9%. This one has gone up to 4.1%. And for 2025, this was at 2.9%. This is currently at 3.1%. And beyond that, it was previously at 2.5%. It was unchanged at 2.5%. So the expected increase is actually going to be next year and the year after for the interest rate projections. Now, considering that we are at 4.5%, for next year, the projection is actually at 5.1%. So we are actually very close to the terminal rate in terms of rate hike expectations from the FOMC. If anything is unchanged at this point in time, if the inflation number keeps going down, then we are going to be looking at probably more of a 25 basis point hikes going forward from the FOMC. Now, coming in behind that, Bank of England also hiked by 50 basis points last week. Again, this is already priced into the market. ECB is also following through with just a 50 basis points rate hike. Now, with last week's data, UK retail sales basically wraps up the week. Lower print at negative 0.4% month-on-month, negative 5.9% year-on-year. Both are lower than forecast. All right, so let's take a look at what's going on this week. We don't actually have a lot going on because we already have the inflation numbers come out. We've already got the central bank decisions pretty much done for this year. Other than that, we are pretty much looking at the business climate in Germany, but really that's not really going to impact a lot. On Tuesday, we've got the RBA meeting minutes. We still have the Bank of Japan interest rate decision. Obviously, there's a lot of talk right now in terms of the Bank of Japan and the Japanese government joint statement, but that's not going to happen until next year, and probably not. Nothing's probably going to change from Bank of Japan until Governor Kuroda steps down. I think that's going to be in April. So right now, RBA meeting minutes obviously going to be key. Probably wouldn't have much of a huge impact in the market. Bank of Japan interest rate decision expected to remain unchanged at this point in time. US building permits, that's going to be up next in the data wise. We are going to be looking at housing starts instead of the building permits, and if for any indication in the market. All right, on Wednesday. Again, Germany consumer confidence, that's going to be on Wednesday. Canadian inflation rate numbers, that's going to be coming in, expected to come in at 6.6%, again lower than 6.9%. The inflation rate month-on-month also expected to drop to negative 0.1%. core inflation rate at this point in time, the consensus is going to be the same at 5.8%. We are going to be looking at the CPI trim mean CPI. Previous number was 5.3%. Expected to come in at 5.2%. Other than that, it's all going to be oil data coming out on Wednesday from the U.S. crude oil. Next up is going to be Thursday. That's going to be for the GDP numbers for the UK. Quarterly GDP expected to drop in lower, negative 0.2% from 0.2%. Year-on-year GDP expected to drop down from 4.4% to 2.4%. US GDP, that's pretty much expected to drop also from 9% to 4.3%. So we'll see what happens there. This is going to be the final GDP numbers from the US and the UK. That's pretty much it. Inflation rate in Japan expected to come in a little bit higher at 3.9% from 3.7%. Friday, again, nothing much. We've got personal income and personal spending, which is the PCE index, expected to drop down as well. So this is going to be more in line with what the FOMC is going to be expecting. All right, with that, let's move on to the technicals. Okay. So first of all, let's take a look at the dollar index here. We do have a drop below 105 on the dollar index, but right now it is currently finding a little bit of support around 103.50, but we are going to be focusing around 104 in terms of key levels for the dollar index here. So as long as 104 holds for the dollar index, that's likely going to keep this a little bit stable, right? Do we expect continued drop on the dollar index? I think at this point in time, we might actually see a little bit of a technical correction happening for the dollar index. So this one could actually bump up to 106 for the dollar index. Now, with the 10-year treasury yield, this is actually pretty flat at 3.5%. So we are looking at more of a stable end of the year right now for the US dollar. All right. Next up, we've got the Aussie USD. Aussie USD right now is finding support at 67 cents. This one here is expected to drop down a little bit lower, potentially towards 66 cents or 65 cents. That's where the next key support level is likely going to be. Again, this is going to be the high in September and pretty much November before the whole thing breaks to the upside. So this is likely going to be tested as support again. Where it is right now at around 67 cents, that was actually July low for the Aussie USD. So for the Aussie USD right now, if it does break below 67 cents, then we do expect a little bit more of a pullback towards 66 and potentially 65 cents on the Aussie USD. Next up is the Euro USD. In terms of Euro USD, key resistances remains unchanged at 1.07. So I can actually adjust this to 1.07. And this is basically what's capping the market right now. Beyond 1.07, obviously, we still have 1.0775, which was the previous resistance, and then 108. So until we actually see a daily close above 107, 107 is likely going to cap the market from progressing any further. Zoom in a little bit, and we actually look for potential support still at 105. So expect more of a range-bound market condition between 107 and 105 for the Euro USD. So I think there was a little bit of a confusion last week. People are, I was away, but I was reading through that people are saying like, oh yeah, US PPI was a little bit higher and stuff like that. CPI was lower. The FOMC does, lower their interest rate hikes. Again, this is going to be dollar negative, but what we're looking at right now, why are we not seeing a follow through on the Euro USD and a Pound USD? We might see a little bit more of a technical correction right now. For this one to actually continue to push up, we need that correction to happen. So for now, this is going to be traded within range 107, 105 with a pivot at 106 for the Euro USD. Next up is the Pound USD. Pound USD, again, we are looking at a potential resistance at 1.24. The exact number is actually 1.2450, but if we take a look at the whole picture here, price is actually unable to consistently break above 1.23. So this is going to be your first key resistance for the Pound USD. Your key resistance will be at 1.23, 1.24, and then 1.2450. But until that happens, we're still looking at continued potential pullbacks towards the next available support level, which is going to be at our previous resistance, which is 1.2 to 1.2050. So this level is going to be tested as support. If it does break below 1.2, then we actually don't have to worry a lot about this, because we technically have a lot of support to the downside. We've got 1.19, 1.18, 1.1750. So this, I would really take this more as, you know, the market as coming in towards the end of the year. It's going to get a little bit quiet. So there's going to be more of a technical correction, because more on profit taking rather than anything else right now in terms of the currency movement. All right. Finally, we've got the dollar yen to cover the majors. Dollar yen, this one here is finding a lot of strong support at 135. In terms of resistances, we are still capped at 138. So, you know, price push back above 138, that's likely going to see a move towards 150. But if if it keeps being capped at 138, if it does have a daily close below 135, then that's when we're going to be looking at more of a lower pull on the dollar yen. Expected pullback would be towards 132. But at this point in time, we definitely need to have more of a daily close below 135 more than anything else. If it's any help, then you want to be looking at this support trend line here. So any break below this support trend line, that's going to trigger a further drop to the downside. But because for it to close below that support trend line, that's going to take it very close to 135 support. I'm just going to base it on 135 as your key support for the dollar yen. For this one to continue to push down on the dollar yen, 135 on the daily, we need to see a close below 135 on the daily. All right. Okay. So finally, just to wrap things up for gold, because if I don't do gold, I'm gonna get a lot of slack for this. Okay, for gold, we have reached 161.8% in terms of daily daily target. That's 161.8% extension, which is at 1824, very close to 1825 in terms of key levels. So if we get rid of the whole thing, we are actually now traded below 1795. Therefore, 1800, 1795 is going to be your key resistance for gold. Don't expect a huge movement on gold here, because we do have a little bit of a range coming in. We've got support at 1770 for gold. For now, the best way to trade gold is actually trade this within the $30 range, 1770 to 1800 for gold. Okay, with that, good luck with your trades, and I'll see you soon.